Okay, we had the rally back up. We had bearish engulfing candlesticks yesterday. They did not get confirmed and likely still in the counter trend or wrapping it up. I'll show you what I'm looking at on the 15-minute chart. The Dow was up 81 points, up 0.18% today. The market was helped by Apple, an Apple rally based on an investment announcement with Apple that is being announced at the White House. So again, that helped the market, even though we had, a super micro computer sharply lower. AMD got hit by earnings, down nearly 6.5%. We had these down in after hours, but futures recovered, and we saw the Apple rally that helped the NASDAQ and the S&P. We also had Snap take a hit. I talked about this in yesterday's video, down 17% by the close. So market shrugging off Snap earnings and AMD earnings, super microcomputer, and just rallying back up to resistance with the Apple announcement. We had the S&P close near the highs. It was up almost 46 points. It was above 50 points at the highs. Closed at 63.45. NASDAQ up 1.21%. The Russell was down 0.20%. The VIX was down by 6%, back testing the trend line that I've been talking about. Trump raising India's tariffs to over 50% for buying Russian oil, it by an additional 25%. Market just shrugging it off. Again, I told you we were going to get more tariff news that was going to rattle markets. Market shrugging this one off anyways for today, but get that announcement for semiconductors and pharma. The semiconductor announcement likely coming next week. Tariffs on semiconductors, and next week we get the CPI data. We talked about the seasonality. Remember, on July 3rd we went up to a high after our late our low there in June 22nd, I believe it was, and we went up to a high and we went sideways. Well, in keeping with the seasonality, I told you we could try to go higher, form more divergences, which we ended up doing. We went sideways for about 2.5 weeks ago or so. Now we're seeing the seasonality begin to play out as we've turned down. So again, we could see a bottom here in August somewhere, and then the rally resume in September, be on into October. The seasonality has a September peak and a sell-off into October. See how it plays out, but again, I think you've got a really good shot of the market trying to top in September or October. Usually have some kind of sell-off surrounding those months. So the rest of the seasonality, again, question mark. It doesn't always play out. It did not play out back in March. To rally in March, we sold off to an April low in March. It doesn't always play out. It's often correct, but please consider supporting the channel today. Channels on YouTube make their money by getting sponsors and selling you stuff. I choose not to do that. Not here to have me sell you something. You're here to look at my charts. You're here to try to figure out what's going on based on mathematically based indicators. Rather than trying to sell you something, I just ask that you just support the channel. Do what you can to help out. Partner with me in supporting the channel today. I just put it all out there for free and just ask that you step up to the plate and help me out and partner with me supporting my YouTube channel. It takes a lot of time and effort to do this. I'm just showing you stuff I look at every day. It takes me just a few minutes to go through my charts and look at them, but there's a lot involved bringing this to you in a presentation. You could just take a moment and consider following the link below and supporting the channel today. I would really appreciate that. Please let me know you want this information and that you like this information. My indicators really help me. I hope they help you as much as they help me, because I really find the indicators very, very helpful making my decisions and trying to understand what's going on. Thank you for your consideration in supporting the channel today. Look, I told you the VIX broke out. We saw that last Friday. I told you right here we were forming this bullish divergence on Thursday when I told you, again, I believe that the top was in. I told you we were forming these bullish divergences and we were going to see the VIX begin to take off. This is right below the center line here with our MACD as we back test. Again, I told you yesterday that we were back testing. If we, right here I have this shadow from the high here to here, and we're back testing that beautifully, but I told you that we have a back test of this trend line from the breakout point there, I'm sorry, this trend line right here, which I slightly excluded the shadow. I'm connecting this peak and this peak with the blue line right here. And if we include this shadow, we were just right at it yesterday, slightly breaching that today. But I think we're in backtest mode here. Regardless, both those trend lines are being backtested. I think we're in backtest mode. The Bollinger Bands are tightening up, telling us something's coming down. Here we've come above the 50 period. We've dropped below it today. Backtest, if we now happen to fill our gap right here, and if we now have a gap fill here on the VIX, if we now have a gap fill on the S&P, we can resume the advance on the VIX and we can drop on the S&P 500, formed a bear flag on the S&P. So see that in this video. So again, I'm watching these closely. We got above the 50 level after being consistently below it, had a couple pushes above it, but they failed. Here, if we can pull back to the 50 and then turn back up, we can see a bigger move with volatility with the VIX, the S&P a bigger pullback. Signals are still bearish here with the NASDAQ. You can see red bars, red cloud. The momentum line is still bearish. Trend signals are still bearish. As long as the signals are bearish, we can go lower. Flipping back to bullish and something else is going on. Do what I think. Here's the S&P 500. I told you last week I thought we topped on Thursday. Told you I sold into the rally on July 24th. Short position that I accumulated on the 25th and the 28th on that Friday and the Monday after I sold into the rally, and then completed it here with this bar on July 31st. Far it's playing out, my signals are bearish. Momentum signals here, momentum with the bearish reversal of conditions, momentum line, they're bearish. Trend signals are bearish for the most part. Got some bars going back and forth from blue to red, back to blue. Again, going sideways here. As long as the signals remain bearish, we can go lower to the 50 or the 200 period moving average. True for the NASDAQ. Stochastics turned back up. The divergences gave us a sell-off. My guess is it's not done. I think we're headed towards the 50 or the 200. I think we have these wave fours under construction, and I think we go make new highs to complete a top later, possibly in September or October, as I've said. Signals are still bearish. This is momentum right here. If it remains bearish, we can go lower. The 50 or the 200. Trend signals for the most part are bearish. A few of them are showing sideways movement. Most of them are bearish. The rally is just filling the gap and testing our 10 periods. Breakdown from the rising wedges, we can resume the decline going towards the 50 or the 200 period. This is the NASDAQ daily chart. Signals are bearish. We'll see if they remain that way. We can get a bigger sell-off. Conditions still, despite the rally back up to fill the gap we have, momentum line still bearish. The divergences playing out, giving us a sell-off. Now we've rebounded back up to test the 10 period on the S&P, fill the gap. Seeing these divergences play out here with momentum, we're still in the negative region. Still have sell signals. So again, I still think back to test the 50 or the 200 period moving average. We've had a rally back up to fill the gap, but signals are still bearish. We try to go challenge the highs, they got to flip back to bullish. Now, the momentum signals are bearish and the trend signals are bearish. Now, if my signals remain bearish, we can get a bigger sell-off towards the 50 or 200 period moving average in the daily time frame. My signals, even with the rally back up, I still have red bars, a red cloud. Signals nailed the sell-off after the February peak and the reversal at the April low. The uptrend, and now they're bearish. If they remain that way, we can go lower, getting rejection off the 10 period moving average and having filled the gap, last Friday's gap down. S&P is rebounding back up to fill the gap, but it's stalling there. The gap from last Friday, we're up 1.72% for the week after turning off of this trend line. This is why I told you I think we have a top on Thursday. I'm standing by that. I believe that is the top. We got a bearish engulfing candlestick, but that candlestick has to be confirmed. Bring up the S&P up close here in the weekly time frame. This is the bearish engulfing. We gapped higher, went higher, up to the trend line I just showed you, and then we ended up closing below the low of the previous week's bar. In order to confirm this, we have to take out the low from last week. We have to take that out, and that would be confirmation. We gapped higher this week, and right now, so far, you have an inside week. We'll see what happens by the end of the week. Will this candlestick, this bearish engulfing candlestick, be confirmed off of the trend line and give us the pullback And again, eventually I think we're going to move to this upper channel line right here. This black line right here, the parallel boundary. We did still at the red trend line. Eventually I think we'll get above it and we'll move to this trend line, probably towards 66 or 6,700, where I think the stock market will put in a peak, likely in September or October, coming months ahead. Maybe it drags out longer. Maybe it's a little bit shorter. Again, the trend line is my target. Date, not a number. I'm just giving you an estimated time of when we might be able to reach it. Trend line is my target here with our log scaling. Trend line here with our linear scaling going back to 2020. And again, remember when I called the bottom, this trend line, we hit it, the red trend line right here from the 2020 low, 2022, 2023. We hit it at the April bottom and horizontal support. And we got this rebound. Told you we were going to go to new highs because this move was corrective. The bears were telling us we were going to crash here. Told you we were bottoming and we were going to go to new highs. And eventually, I think we're going to reach these trend lines that I'm talking about in the weekly time frame, 66, 6,700 or so. I think we pull back and then I think we end up going higher. One might be a little bit higher than the other. Channel's longer, but again, we might move closer to it, possibly even reach it. But again, I'm looking 66, 6,700 area or so, give or take. A couple of things I'm watching. The 10-period moving average. That's a red line you see right there. We broke down from the rising wedge. We back tested the rising wedge. We came down to horizontal support and we bounced. We're coming back to the 10-period and we're filling the gap. We filled the gap on an intraday basis yesterday. I think we did it on a closing basis today. We'll look at it up close in a moment. It did pull slightly off of the highs, moved slightly off of the highs there, but you got a little miniature head and shoulders. And if you take the measurement from the high down to the low there and that 2-day drop that we had on Friday and Monday with the confirmation of our bearish belt hold candlestick, it measures down here to fill this gap. You see the gap, the dotted line over here, and it measures down towards the upper end of the cloud, just beyond our 50-period moving average, but not reaching the 200. So again, the measurement, that's a minimum objective target if this pattern plays out. The other pattern we have is a measured move from the high on Friday or on Thursday down to the low right here. If you take that measurement and tack it on to the highs here, the measured move takes us down towards our 50, just beyond our 50-period moving average. Again, listen carefully what I'm about to say. I told you, I thought we were going to get a sell-off. I don't know if it's going to be a mild pullback or something a little bit bigger. I don't think we're coming down here to the 61.8 Fibonacci or 78.6 Fibonacci. I think you're likely going here towards the 50, maybe just beyond it. The 200 period, I told you it might be a more mild pullback if we don't reach the 200 and just move towards the 50 or just beyond the 50. We may move towards the 200 and get a bigger sell-off. Still possible, but I'm telling you, again, my signals are bearish. It's bearish. Trend signals are bearish. They don't tell me how big the sell-off is going to be. I'm just looking at moving averages. I'm looking at the gap. I'm looking at the cloud. The rising wedge might form or evolve into a rising channel with this sell-off. That is possible. So just some patterns, a measured move from the first leg down or the head and shoulders, looking at these levels. We're stowing at that 10 period. Got our negative divergence. If we make our way down to the center line or just beyond it, again, that might be where we bottom out. But these divergences so far are giving us a sell-off. Now we're rebounding to fill the gap and stowing at the 10-period moving average. If we end up seeing momentum try to flip back to bullish, you still have a shot at a divergence right here. If we flip back down, getting rejection off the 10 period and the RSI goes back below 50, then again, you can get your bigger sell-off. Even though it may be more of a mild sell-off, we could see that RSI go negative. When we got back above the 20-period moving average, we saw the RSI jump above 50, and it's been above 50 ever since. Right now it came down to just below 50 with our sell-off here, and now we've rebounded back up to the cloud of resistance, the momentum cloud, and our 10-period moving average, and the gap fill. And I'm going to bring it up close, but some things are going to move. The trend lines and the annotations are going to move because I'm bringing it up close. I want you to see this. Again, we broke down, we back tested, and then we've come down below the 10 and 20 period, and now we've come back up to the 10 period moving average and the cloud, and we filled the gap right here. We did do it on a closing basis. Get rejection, again, I'll be watching the 50 and the 200 period moving average. Additionally, the cloud here, the trending cloud, the 50 period, the 200, and the gap fill. As we rise back into the 10 period moving average, if I bring it up close, here you can see our reversal bar right here, our reversal bar, the end of an uptrend, black Maro Buzo, which means bald in Japanese, no top, no topping tail. It's a reversal bar. At the end of an uptrend, it's a bearish bell hole candle pattern, meaning that's likely the top. Gapped lower, confirmed it, but now we're coming back up to fill the gap, test the 10 period. You see the little red line there? That's the 10 period up close and personal, filling the gap, testing the 10 period, stalling there after filling the gap on a closing basis. We tried to do it yesterday, but we did it on an intraday basis, and we formed a bearish engulfing candlestick. But as I always say, again, the candlesticks are meaningless. The patterns are meaningless unless they get confirmed. We needed a sell-off to take out that low of the 2-day pattern. We did not get it. That pattern is canceled out, and now you have, again, just this bear flag going into the 10 period moving average, going into the gap fill. If we sell off, then it can play out. Let me show you the bear flag on the 15-minute chart. You can see it best. I posted this chart. We were testing the 200 period here during the session with that number 3 that you see right there, and I marked it as 3, 4, and 5. It looks like it's played out. We're about to play out. Completing a divergence on the MACD, completing a divergence on the RSI, and the most recent price action right here, but also with this other peak over here. We have this larger divergence that has developed. So you've got these divergences going into filling the gap on a closing basis. The gap fill, and it's marked here by this dotted red line at 63.39 and some change. We tried to fill it on an intraday. Tried to fill it yesterday. We did it on an intraday basis. Today we did it on a closing basis. But you're forming these divergences. So again, you have a bear flag, and I wanted to show you the 15-minute chart here. Gap down. Here's the gap and trap up here that I talked about last Thursday. Here's the confirmation. We gapped lower. We've moved back up to fill the gap on a closing basis, testing the 10 period, just slightly overthrowing the 200 here. The 50 is still below it. If we get rejection and we need to see a breakdown of the bear flag pattern, we need to break this trend line right here if you have a bear flag pattern. Again, the counter trend continuation pattern, a continuation of the downtrend. Again, if we get a more mild pullback, then again, maybe you just sell off a little bit. That's the end of it. You have an ABC structure. Elliott wave speculation. I'm just showing you some things that I'm looking at. Again, this Elliott wave count is not set in stone. It could be a complex correction. It could be drags out longer than I've marked here. I've marked an A question mark. Is this whole thing an ABC for A or a WXY pattern? I don't know. I mean, it's too early to tell. We don't know. So again, signals are bearish. If they remain that way, we could see a bigger sell-off, and then we'll be having to watch for clues how the correction unfolds. Right here, I'm speculating. That means it's still uncertain. Have other possibilities. This is speculation. I've marked this as a 1, 2 from our peak right here on the 15-minute chart, a 1, 2, a 3, a 4, and a 5 for A in a 5, 3, 5 pattern, and then we get this 5-leg push-up for A, B, 5, 3, 5 pattern, and now 1, 2, 3, 4, and maybe 5's done or about to finish here. Maybe it's done today. Get another 5, 3, 5 pattern as an ABC for the counter trend, marking this as a 5 down with a 3-leg back up, A, B, C in red, ABC in red, a 3, and that's marked B, and then we get another 5-leg push down for C. And again, this may just be the first part of a correction, or it may just be a more shallow correction, as I keep saying, and we go to the 50 period or just beyond the 50 period moving average, not to the 200 period moving average, a more shallow retracement. I don't know. This is the way I'm marking it, as an ABC, and again, we now have these divergences. I think it's likely we're going to resume the decline. If momentum signals remain bearish, which they are with this rally, and trend signals remain bearish, then we could see another leg down. Not only are we stalling at the 10 period in the daily time frame, the 200 period on the 15-minute chart, we're just above it. We're just above the 50 period here. If we sell off further, you'll see the 50 cross below the 200 period moving average here in the 60-minute time frame. If we get more of a shallow retracement, then again, we may have an ABC structure, and we just may bottom right here around where I've marked this A. Okay, this first arrow down. If we get a complex correction, or if that's the first leg down of a larger ABC, then again, you can see a rebound back up and then another push down or something deeper than what I've marked here. Again, I've talked about a shallow retracement or a deeper retracement towards the 200 period in the daily time frame. I don't know which it will be. Again, do we find a bottom here around this level right here where I've marked A, or does it extend on out and go towards mid to late August and we get something more like this? I don't know. My signals remain bearish. I'll be watching for clues. I'll be watching. Do we end up seeing divergences end up developing here on the RSI, on the MACD here in the 60-minute time frame? So what I'll be watching for is if we get another sell-off, do we end up seeing that 50 cross below the 200 and we get a bottom shortly around surrounding that cross just before it happens or just after it happens if we see that happen, or drag out further. Sometimes the crosses are associated with tops and bottoms. Just some things I'm watching and considering. Let me be clear. I think this is corrective, just like I told you over here it was corrective, an ABC. We bottomed out the day of the bottom because we hit major support. I told you going into the week of the tariffs, we were going to bottom that week. I told you on the 7th that I thought that that was a bottom. I was right. As I told you that, again, when we made new highs, I was predicting new highs. We went sideways, and I told you to be watching for a top. And I think we had that last Thursday. Told you that the tariffs for August 1st were going to be associated with the top, and we'd see a corrective move in August. Or a shallow retracement or a deeper one, I do not know. It could be deeper than this. It could be deeper than what I've marked here. If we try to move beyond the 200 period moving average, I don't know that we do that. Looking for clues, whether we get a shallow or a deep. Divergences on the 15-minute chart with the RSI and the MACD and the price oscillator. We're getting these divergences in the 5-minute time frame as well. Here's a divergence on the RSI in the 15-minute or in the 5-minute time frame. Again, if we sell off, we got to break the trend line, drop back below the 200, drop below the cloud. If this is a bear flag, counter trend rally, filling our gap. Then we got to break the trend line, break the 200 here, and begin to see a move back down towards these lows over here, this little miniature double bottom that developed with our sell-off from last Friday. Divergences on the MACD and the RSI in the 5-minute time frame and the 15-minute time frame. We'll see if they play out now. If we can break the channel here, the little channel of the bear flag pattern, we have filled the gap. And we're testing the 10 period and the 50 period on the 60-minute chart and that 200 period on our 15-minute chart. These are the levels of resistance. Develop. We had the rally back up, that record rally. I think that was wave 1, and then we pull back for wave 2. I think primary wave 1, 2. I think this whole thing is a primary wave 3, and I think we're now in primary wave 4. Whether shallow or deeper, I don't know. And then I think we get one more push higher on into September or October that I think will be primary wave 5. I think that will give us the cycle 5, Roman numeral 5 right there. So we'll have 3, 4, and 5. And I think that will complete the super cycle. And again, I've shown you my longer term counts going all the way back about 100 years. We're getting a major top right here. I think this rally would take us into the trend lines I've been talking about in the weekly time frame. So this is what I think is going on. This rising wedge breakdown could evolve into a channel. Brand new trend line. We'll be watching to see how it unfolds. Our stochastic turning back up today. Again, end up rolling right back over. Stochastic is looking at short-term price fluctuations. They had the larger divergences playing out here on the stochastic, on the MACD, and then the RSI did move to that new extreme. Marking our top here last Thursday, we had an extreme that ended up marking the bottom right here. So again, short-term bearish, I still think we're going to go higher. I think we are going to top. The yield curve invert. The yield curve inverted once again. And I think that buys us more time. We're not seeing the steepening of the yield curve uninverting, but curve inverted again. So I do think this buys us a little bit more time before the recession hits. NASDAQ 100, we got the same thing. You've got the gap getting filled. You're coming up here. You're filling the gap. Just beyond the 200 period moving average here in the 15-minute time frame. You're forming a bear flag. You're forming negative divergences. So again, if we get a lower high, we'll be watching to see if we begin to turn back down. We got to drop below the lower boundary of the trend line. We got a drop of the pattern of the bear flag Take out the cloud here in the 15-minute time frame. You got to drop back below the moving averages to see these divergences begin to play out. So we'll be watching. NASDAQ 100 was up 296 points today, up 1.29%. Again, stalling just beyond the 50-period moving average here. A little hard to see. I've zoomed out so you can see the entire wave count here on the 60-minute chart. Got a bear flag going into that 50-period moving average. Again, do we get a deeper retracement? I've marked this as a deeper, more shallow retracement. We'll be watching for a potential wave 4. I'm bringing it up close here so you can see it on the NASDAQ 100 60-minute chart. Again, we had the black candlestick. We sold off, dropped below the 50, came down here just below the 200. Now we're rebounding back up to the 50 and overthrowing it. If we see this continue, we have to break down. If this is a bear flag, we have to break down below that trend line, drop back below the 50, drop back below the 200 to come back and take out this low. So going to be watching to see what becomes of these bear flag patterns. Again, we've just overthrown the 50. We're stalling around the 200, around the 10-period moving average. NASDAQ overthrew the 10 and the 50. The S&P's hovering right around those levels. 60-minute chart here of the NASDAQ. NASDAQ had a dark cloud cover candlestick yesterday. No confirmation, just like the S&P 500. Here's the dark cloud cover that did not get confirmed. Again, we gapped higher and then we closed deep into the previous day's candle. You got to have confirmation with candle patterns. Then we gapped higher and now we're going a little bit higher. We're filling the gap on a closing basis now. We've moved just above the 10-period. S&P going around the 10-period. The NASDAQ above it here, full above it. Still have a potential bear flag. So do we see that play out and drop back below the 10-period moving average now that we filled these gaps? S&P had moved just slightly above that 10-period. NASDAQ's well above it, but do they drop back below the 10-period moving averages? And again, NASDAQ coming up just over the 10-period, up to the upper portion of the cloud. If we get rejection, I'll be watching the 50. I'll be watching the cloud right here. If we get something bigger, I'll be looking at the 200-period, the 100-period moving average. And again, let me repeat, we may get a more shallow sell-off and play out either way, deeper or a shallow sell-off we'll be watching. But once this wave 4 is done, whether near the 50 or the 200 or in between them, whatever, we'll be looking for one more push higher, and then I think that will give us the wave 5. We broke down from the rising wedge pattern, and then we tried to get back above it with Thursday's candle, and it failed, and we got rejection. Again, a back test, and confirmed the candlestick on Friday. Now we need a follow-through if we're going to see a bigger sell-off. Same thing I said with the S&P. A smaller, more shallow retracement would just be an ABC type of a structure near the 50 or just beyond it, moving towards the 200 but not reaching it. I think bigger would move closer to the 200. Sharper sell-off would take out that 200-period moving average. So again, I'm looking at the 50 and the 200-period moving average as I've been talking about in every single video. We saw the stochastics turn back up. Still seeing these divergences play out in that we've gotten this peak and this selling pressure. We may end up going down to the center line and trying to bottom or move into negative territory if we get something bigger. So we'll be watching MACDs closely.